Global Monetary Watch, July 30th. The Iraqi dinar remains one of the most closely watched currencies among people following Iraq's economic reforms, banking modernization, and monetary policy. Today, we're examining a discussion that has generated considerable attention: the idea of an Iraqi dinar valuation at $4 or higher, a scenario that commentator Frank26 has discussed repeatedly over the years. But there is an important distinction we need to make from the very beginning. A proposed valuation is not the same thing as an official exchange rate announcement. So rather than treating a number as a confirmed outcome, today we're going to examine the economic reasoning behind the discussion, the reforms taking place in Iraq, and the indicators that could provide a clearer picture of where the country's monetary system is heading. The first place to look is the Central Bank of Iraq, because the CBI sits at the center of Iraq's exchange rate and monetary framework. Much of the recent discussion surrounding the dinar involves the relationship between the official exchange rate and the rate available in Iraq's parallel market. Managing that difference has been an important challenge for Iraqi authorities. When the gap becomes wider, it can indicate pressure within the foreign exchange system and create complications for businesses, consumers, and international transactions. Efforts to narrow that difference therefore matter, but they should not automatically be interpreted as evidence that a specific future exchange rate has already been decided. This is where the broader reform story becomes important. Iraq has been working for years to improve the structure of its financial system, strengthen banking institutions, increase transparency, and bring financial practices closer to international standards. These are not changes that can normally be completed through one announcement. They require regulatory adjustments, technological improvements, institutional cooperation, and sustained implementation. The central bank's efforts to improve foreign exchange management are therefore part of a much larger process. For anyone following the Iraqi dinar, understanding that wider process is more useful than focusing exclusively on individual rumors about a new rate. Frank26's discussion of a $4 or higher valuation is built around a particular interpretation of Iraq's economic potential. His argument has generally focused on the country's enormous natural resource base, particularly its oil reserves, as well as the possibility of Iraq becoming more integrated into international financial markets. The theory suggests that if Iraq continues modernizing its financial infrastructure and eventually achieves greater monetary normalization, the exchange rate could theoretically be influenced by stronger economic fundamentals. However, the specific figure of $4 or more remains a scenario discussed by commentators rather than an officially established exchange rate announced by Iraq's central bank. Another major part of this conversation involves Iraq's relationship with international financial institutions. One term that frequently appears in discussions about the dinar is Article 8 of the International Monetary Fund's Articles of Agreement. In simple terms, Article 8 obligations relate to countries accepting certain international standards concerning current international payments and avoiding certain restrictions and discriminatory currency practices. Discussions about Iraq's progress toward greater international monetary integration sometimes connect this subject with future currency normalization. But Article 8 status by itself should not be interpreted as an automatic mechanism that produces a particular exchange rate. The same caution applies when people discuss currency convertibility. Greater convertibility and easier international financial transactions can be important elements of a modern monetary system, but they do not establish a predetermined value against the US dollar. Exchange rates are influenced by numerous factors, including monetary policy, inflation, reserves, fiscal conditions, market demand, international trade, political stability, and confidence in financial institutions. That is why a discussion about a possible $4 valuation needs to remain separate from the question of whether Iraq has actually announced such a rate. As of the information represented in the supplied transcript, those are two very different questions. Iraq's oil industry is another major component of the economic picture. The country remains one of the world's significant oil producers, and petroleum exports provide a substantial portion of government revenue and foreign exchange earnings. Oil income is therefore highly relevant to discussions about Iraq's reserves and its ability to manage external financial obligations. A country with significant export revenues has a different monetary foundation from a country with limited access to foreign currency. At the same time, oil dependence also creates vulnerabilities because global energy prices, production levels, export arrangements, and geopolitical conditions can all affect government finances and foreign currency inflows. Foreign exchange reserves are particularly important when discussing monetary stability. Reserves can help a central bank manage external payments and support confidence in the financial system. Iraq's reserve position has therefore attracted attention from analysts watching the dinar. But reserve should not be confused with a guaranteed mechanism for increasing the value of a currency by a specific amount. A central bank's reserves, monetary policy, fiscal position, and exchange rate framework all interact with one another. The existence of substantial reserves can strengthen a country's financial position, but it does not independently establish what one unit of its currency must be worth in another currency. Banking reform is another area that deserves close attention. Iraq has been working toward improving its banking sector, and international consulting and professional firms have been involved in various reform and modernization efforts. The broader objective is to improve governance, compliance, transparency, digital banking capabilities, and connections with international financial systems. These developments are significant because a modern currency system depends on more than physical banknotes. It also depends on payment infrastructure, electronic transactions, regulatory oversight, anti-money laundering controls, accounting standards, and institutions capable of operating within international financial networks. The transition away from an economy that relies heavily on cash is also an important part of this modernization process. Expanding electronic payments can improve transaction records, reduce certain forms of informal activity, and make financial flows easier for institutions to monitor. Iraq has been pursuing greater use of electronic banking and digital payment systems as part of its broader financial reforms. That does not mean that electronic banking automatically leads to a higher currency value. Instead, it can contribute to a more transparent and efficient financial environment, which is one of the structural conditions analysts consider when evaluating the long-term development of Iraq's monetary system. The discussion becomes even more complicated when global currency trends are introduced. International markets have seen continuing debates about diversification away from dependence on a single reserve currency and about the future role of different monetary arrangements. BRICS-related discussions, for example, have generated considerable public attention. However, it is essential not to confuse those global discussions with Iraq having adopted a new currency bloc or formally replacing the US dollar in its monetary framework. The Iraqi dinar is not automatically connected to every international conversation about alternative reserve systems. Global monetary trends can influence the environment in which countries operate, but they do not by themselves establish a future Iraqi exchange rate. This distinction is especially important because currency stories can spread quickly online. A comment from an analyst can sometimes be presented as though it were an official statement from a central bank. A theoretical valuation can become described as a confirmed rate. A policy discussion can be transformed into a claim about an imminent currency event. Those changes in wording can completely alter the meaning of the original information. That is why the safest way to follow the Iraqi dinar story is to separate official announcements from commentary, documented reforms from speculation, and economic indicators from social media rumors. The $4 figure itself should therefore be understood in that context. It is a valuation scenario discussed by Frank26 and others, not a rate that should be presented as confirmed simply because an analyst believes it is possible. The actual exchange rate of the Iraqi dinar is determined within Iraq's monetary framework and is subject to official policy decisions. Any meaningful change would require credible evidence from appropriate Iraqi authorities and, depending on the nature of the change, potentially broader international financial implications. Without such confirmation, a specific future number remains an analytical scenario rather than established monetary policy. Another important issue is timing. Currency discussions often focus heavily on the question of when something will happen, but economic reforms rarely move according to the schedules suggested by online commentary. Banking reforms can take years. Regulatory changes can require multiple stages. Political developments can alter priorities. International compliance requirements can take time to implement. Even when economic conditions improve, policymakers may choose a gradual approach rather than a sudden change. This is why watching the underlying indicators can provide more useful information than attempting to identify an exact date for a hypothetical exchange rate adjustment. Among those indicators, the relationship between official and parallel exchange rates deserves continued attention. If authorities can consistently reduce distortions between the two markets while maintaining stability, that can provide evidence that monetary and foreign exchange reforms are having an effect. But the trend needs to be sustained. One temporary improvement does not necessarily establish a permanent transformation. Analysts therefore need to examine the data over time, including foreign exchange market conditions, inflation, reserve levels, banking activity, and the effectiveness of regulatory measures. A long-term pattern is much more informative than a single headline. The International Monetary Fund's assessments can also provide valuable context. IMF consultations and reports examine economic conditions, fiscal policy, monetary policy, financial sector developments, and structural reforms. These assessments do not predict a particular dinar valuation, but they can help observers understand how international financial institutions view Iraq's economic progress. The same principle applies to information from the World Bank and other credible institutions. When evaluating major claims about the Iraqi dinar, official documents and established financial institutions generally provide a stronger foundation than anonymous sources, screenshots, leaked documents, or unverified social media posts. Political stability also matters. Economic reform cannot be separated completely from the political environment in which it takes place. Government decisions, parliamentary developments, budget priorities, institutional relationships, and policy continuity can all affect the speed at which reforms are implemented. Iraq has made progress in several areas, but the country's economic transformation remains a continuing process. That means analysts need to consider both achievements and obstacles. A balanced assessment recognizes improvements without assuming that every reform will proceed smoothly or that every economic challenge has already been resolved. This is also why Iraq's oil revenues need to be viewed within the broader fiscal picture. Strong oil production and export income can provide important support, but government spending commitments and fluctuations in oil prices can affect the amount of fiscal space available. Iraq's economy remains significantly exposed to developments in the energy market. A sustained improvement in economic diversification would therefore be another important development to monitor. The more diversified an economy becomes, the less dependent its fiscal and external position is on one primary source of revenue. When all of these elements are considered together, the argument surrounding the Iraqi dinar becomes more nuanced. There are genuine economic reforms taking place. There are real efforts to modernize banking. Iraq possesses substantial natural resources and significant oil export capacity. Its financial institutions continue working towards stronger international integration. These facts provide legitimate reasons for monitoring Iraq's economic development. But none of those facts independently establishes a $4 exchange rate. The distinction between improving economic fundamentals and a specific currency valuation is critical, particularly when discussing a number as dramatic as $4 per dinar. Frank26's role in this conversation is therefore best understood as that of a commentator presenting an interpretation of Iraq's long-term monetary potential. His views have attracted attention because he has followed the Iraqi dinar story for many years. Supporters of his analysis focus on Iraq's resources and reform program, while critics question whether those factors necessarily translate into the type of valuation he discusses. Both perspectives highlight an important reality: economic data can be interpreted differently. The most reliable approach is to examine the underlying evidence and distinguish what is documented from what remains theoretical. For people following this story, the most meaningful developments are likely to come from official sources, rather than from increasingly dramatic headlines. Watch statements from the Central Bank of Iraq. Monitor IMF assessments and economic reports. Follow developments in Iraq's banking sector and electronic payment infrastructure. Pay attention to foreign exchange market conditions and the relationship between official and parallel rates. Observe changes in oil production, export revenues, reserves, inflation, and fiscal policy. These indicators cannot tell anyone with certainty what the future exchange rate will be, but they can provide a much more grounded understanding of the economic environment. So where does that leave the $4 plus discussion on July 30th? At this stage, it remains a scenario discussed by Frank26 and other observers rather than a confirmed Iraqi monetary policy announcement. The broader economic developments behind the discussion are real and worth monitoring, particularly Iraq's banking reforms, foreign exchange management, oil revenues, reserves, and international financial integration. But the specific valuation should not be presented as established fact. There is no responsible way to turn an analytical scenario into a guaranteed outcome without official evidence. The most accurate conclusion is that Iraq's monetary system continues to evolve, while the ultimate direction and level of any future exchange rate changes remain uncertain. And that uncertainty is exactly why responsible coverage matters. The Iraqi dinar story has been discussed for many years, and it has generated enormous amounts of speculation online. The strongest way to follow it is not through promises of sudden wealth or claims that a particular rate is guaranteed. It is through evidence, official statements, economic data, and an understanding of how monetary systems actually operate. A major currency policy decision would be significant enough to require credible documentation. Until that evidence appears, The responsible position is to recognize the reforms that are happening while remaining cautious about conclusions that go beyond the available facts. The story of the Iraqi dinar is therefore much larger than one number. It involves the Central Bank of Iraq, government policy, international financial institutions, oil revenues, foreign exchange reserves, banking modernization, digital payments, regulatory reform, and Iraq's continuing integration into the global economy. The $4 valuation scenario has become part of that larger discussion because it represents one interpretation of what Iraq's monetary future could look like. Whether reality ultimately resembles that scenario is a separate question, and only future policy decisions and economic developments can answer it. For Global Monetary Watch, the key message today is simple: follow the evidence, understand the difference between commentary and official policy, and keep every major claim in its proper context. Iraq is undergoing meaningful financial and economic changes, and those developments deserve careful attention. At the same time, no specific future exchange rate should be treated as confirmed without an official announcement. We'll continue following the Central Bank of Iraq, international financial assessments, banking reforms, exchange rate developments, and the broader economic indicators that can help explain what is actually happening. Thank you for watching Global Monetary Watch on July 30th. Stay informed, stay analytical, and remember that understanding the facts is always more valuable than reacting to the loudest headline.